One thing I'm wondering is about the deal or the relationship with the host country, because I mean, one of the, and you would have thought about this, I know, and this is why I'm interested in, yeah, I'm interested in your thoughts on it. How do you constrain or tie the hands of the host country, of the host government? Because I mean, one of the risks is that you have this thriving charter city and the economy's going gangbusters, and everyone's wanting to move into it, and if you've got lower taxes or it's running, it's running itself, the host country, their finance ministry, they're going to look enviously on this little charter city, aren't they? And I mean, they'll want to get a piece of the action. So isn't there a risk there that they could then impose, they could ramp up taxes, they could try and, take, extract some money out of the charter city, and that threatens the viability of it? How do you deal with that situation?
Yeah, so you hit on what I think of as probably the biggest risk to charter city projects, and that's just the fact that there's a political risk.
Yeah.
And the urban developer is going to enter into a public-private partnership in a point in time with a particular political regime. And because these city projects are decades-long projects, the project is going to span multiple political regimes. And so how do you, as the developer, know that the political regime that's agreeing to the public-private partnership today is going to also agree to that same public-private partnership tomorrow when that political regime has changed or altered? How do you know that there is a credible commitment? And so that risk of sort of the government killing the bird that laid the golden egg is ever present. And we've thought of this, and there are several ways that we can go about trying to mitigate that risk, that political risk of expropriation. Two of the simplest, I think, are just about, again, aligning incentives. One, I think within that public-private partnership, there should be a revenue sharing agreement that's embedded. And so every year, the developer within that jurisdiction collects fees, user fees, they collect taxes, they collect land leases, right? Land lease rents from those within that jurisdiction. And I think a percentage of those funds should be remitted to the host country, so that every year the country gains something in their coffers from the success of that charter city. Therefore, it has less of an incentive to see that pot of money that it gains every year destroyed. Another way to do exactly that is by giving an equity stake in the development company to the host country, right? And so if the urban developer succeeds immensely, as has happened in kind of Shenzhen and Singapore and Hong Kong and Dubai, and the city grows, 10%, 5-10% on average year on year, then the host country also reaps huge rewards from that success. So those are two pretty simple ways to align financial incentives. Another simple way is that there are organizations that do offer political risk insurance. MIGA, M-I-G-A, I forget what the acronym actually stands for, but they are the entity under the World Bank group of organizations that offers political risk insurance. A few other things that could be attractive to help mitigate this risk is floating the development company and publicly trading the development company. So then you have big sort of institutional investors within that host country, like pension funds, for example, invested in the success of this charter city. And, whether we like it or not, sort of business elites and political elites kind of talk with each other and influence each other. And if the political elites are threatening to expropriate the charter city, and that's going to have adverse consequences for the pension fund folks, they're going to raise a stink and say, hey, don't do that. That's going to hit our pocketbooks, and we might not support you in the next election. And so that could also be some cover. Another way, and I think this is probably really effective, is to include sort of an objective international organization in the project. You mentioned the World Bank. So by including the World Bank in a charter city project, whether that's a loan or I don't know if they would do equity investments in a private company, that would more be IFC, which is their private arm. But including them in the project would mean that if the political elites decide to expropriate or jeopardize or threaten, interfere with that charter cities project, and the World Bank is involved, that means they're also jeopardizing a bunch of other loans and projects that the World Bank is investing in their country. And they're also jeopardizing their access to concessionary loans and finance that the World Bank offers their country. And so they would not want to, ideally, they would not want to do that. And so there's a bunch of ways to lessen the risk, to de-risk, but you cannot fully get rid of that risk of political expropriation, just because, again, unlike Romer, our model doesn't create a new sovereign, right? These are not sovereign entities. They are subject to the Constitution and criminal law and international treaties of the host country. And so that's sort of an ever-present list. But again, I just listed off a bunch of ways you can help de-risk and mitigate that risk such that it's much less likely to occur.